Are we in a debt crisis, or are we headed for one?
We are in my opinion, we are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers.
What we saw last week, when there was a rumor that BlackRock's ETF had been approved, and you saw Bitcoin just jump in price. It was about 10%, I think, in a matter of minutes, right? So that in and of itself is an indication that there's pent-up demand for this, and they know it. And so even if a lot of that was short covering, it shows that we know that this is news that everybody's waiting on. I do not believe that this news is priced into the Bitcoin market yet. It's starting to get priced in today, as you saw, and I believe it will continue to do this. Of course, it's going to react to what's going on in the economy and market as well. It is still considered a risk asset for many holders.
There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. So a crisis, that's, if we continue down this path in terms of what's likely over the next, 5 and 10 years, then you reach the point that balancing act becomes very difficult.
How will we know? And is it really a function of not having enough buyers for the federal debt? Is there any evidence of that so far?
We're right at the brink of starting to find out that. The amount of selling of government debt collapsed, right? We didn't issue government debt. And now we're going to issue a lot of government debt. And so when we look at the buyers, there appears to be a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year and two.
Given the challenges that we face, fiscal challenges that you describe, we need a political process that will help us get out of it. Do we have that? It goes to the second issue that you always deal with, which is internal conflict.
Well, the things that you see happen over and over again when you look at history is when you have a financial not good situation, at the same time as you have large wealth gaps, you start to see the emergence of populism, and we see extremism in both of the political parties. Okay, we see that split. A populist is an individual or a leader or a political person who will win at all cost, that the rules of the game don't as much matter. And so we're in the January 6th type of incident and so on is very interesting. The political system in terms of primaries and the parties tends to create that sort of polarity. I think that I think it's very clear that there is only one good outcome, if we can, and that's a strong bipartisan middle, because either of the extremes is not going to be able to be dominant. The small right, or even the small left, and as a result, we're seeing a fragmentation. Geographically, you're seeing people move to different areas, not just because of taxes, but of differences in values and so on. And so you're seeing this separation.
I do believe it's a safe haven long term. In the next year, I can't say that I believe that this is going to be the ultimate safe haven in the next 2 months, 6 months. I don't know. It's still very volatile. There's just not enough money in it yet. I do believe it will get there. Ultimately, it will be the ultimate safe haven, and it will be the ultimate asset to hedge yourself against massive money printing. But I do believe today what we're seeing is not unreasonable speculation or exuberance around the probability that there's a spot ETF that's approved soon, whether it's by the end of the year or early next year. We're talking 10, 12 weeks that people are starting to expect that and that in and of itself is a major driver of assets to this asset. So people will be moving out of certain things, long bonds, and into something like Bitcoin as this becomes a separate class of an asset class. Gary Gensler hasn't really had, in my mind, he hasn't had reasonable, defense for not allowing the spot Bitcoin ETF to be approved to this date. And so, but when you have large, massive players who have, between the two of them, tens of trillions of dollars of assets between BlackRock and Fidelity, it's tremendous pressure on them all to figure it out, because it's saying that the people want this, investors want this, they want this easy version of Bitcoin for them to be able to buy and sell in their portfolios. And why it's so important is, I've talked about this before, is that, look, it's very difficult for small institutions and even some large institutions to buy and own Bitcoin. It's a very large, it's a tall hurdle for them to get over in their own operations, right? Because there are legal issues, there are settlement issues, you've got to, who's going to custody the Bitcoin? Where's it going to trade? How are they going to market? There's a lot of issues they have to work out. And it's easy for you or me to just go into Coinbase, buy some, put it in a wallet, no problem. But for the institution, it's much, much, much more problematic, and it's a larger question for them. So what does this ETF do? Well, it translates Bitcoin into the securities language that they already know and speak, and they do business in every day. They can buy it on the New York Stock Exchange. They can settle it on the New York Stock Exchange. They can have their prime broker custody it, and they can margin against it if they need to with cash. And it's all right there. There's no difference between that and owning a spider for them. And so that's what's important. And so that in and of itself will bring, in my opinion, a tremendous amount of liquidity into this asset. It becomes so easy to buy. We've seen problems with spot ETFs for gold. And the problem is it's difficult to audit the gold in their vaults and determine that whoever is sponsoring that ETF holds enough gold that if you wanted to transfer your certificate for the gold and take custody of the gold, we don't know that. We've seen there are problems that it may or may not be there. It may have been rehypothecated. It may have been lent out. Now, the difference with a Bitcoin ETF, as long as it is clearly delineated this way, and the end of the final ETF that is approved is shown that it will be able to be audited simply and show exactly where these addresses of every single Bitcoin it owns is, and that it hasn't been moved or rehypothecated, that it is sitting there exactly where in the wallets they say it is, or in that institutional custody they say it is, then it's different. That it won't have the same risk in my mind that you would with a gold ETF, for instance.